Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Wednesday, 24th day of August, 2016, and this is Trending Markets. Majority of the markets down today, including the Dow Jones Industrial Average, trading off about 0.33%, 18,481. S&P's also trading lower on the day, off almost 0.5% at 2174, low 6875, the high 2187 and change. NASDAQ also under pressure, off about 0.6% at 4785. And then lastly, crude oil also trading lower on the day, off about 2 3/4 points at 46.76. Of course, gold and the rest of the precious metals complex breaking hard. We'll cover that fully, of course, on the gold forecast. Let's take a look at our first chart in Trending Markets. So traders, no doubt, an interesting day in the markets overall. Tremendous pressure on the precious metals. I just got done filming our gold forecast in which we talked about the gold trade that we were just stopped out of. When we look at the Standard & Poor's, there is weakness in the market, no doubt. Down about 10 points, down about 0.5%. But what I find interesting and supportive of the market, believe it or not, is the fact that when we look at this particular line that we've been labeling as our support line, it used to be resistance as we came in and we made these new highs. We talked about that. We talked about the break above that. We labeled this here our scouting party. As I said, that really is a term that was coined and a pattern that was coined, I should say, by Steve Nissan. We then talked about the fact that we have been forming our beachhead. A beachhead is that area in which this market consolidates and most importantly forms a base. Now, today's move was a downward move, no doubt about that. When we look at the lows went just slightly into this area, but I find the fact that we traded and closed above 2171, which bases the E-mini to me is a critical level of support because that's this area of consolidation. And just like the compression triangle that was clearly violated today in gold as that market plunged through it, this is the area that needs to hold, I believe, long-term if we are to look at higher pricing. Now, of course, anything is possible. And the market truly today reacted to the underlying assumption and belief that interest rates will possibly, or probably, I should say, see a rate increase by the end of this year. And if that happens, that's not out of the blue. The Fed has that's been Fed speak for the last 6 months anyways. But I find that the Fed itself has got a series of models, and these models and their statements don't tend to clarify the market as much as confuse the market as this sentiment gets wafted back and forth between positive and negative sentiment and whether or not we'll see this interest rate hike initiated this year. In the big picture, even another 0.25% this year, to me, isn't that significant. Rates are still extremely historically low, and even a 0.25% rate hike, I don't really think would change the environment, the economic environment that exists. But traders are reacting. They're sitting on pins and needles or waiting for words. We also have the Bank of Japan and to see what kind of stimulus they enter in the market. But as far as the Standard & Poor's goes right now, we are holding above this critical area. If we continue to do that, I still believe a base is forming. However, all bets are off if this market breaks below 2171. And traders, I also want to take a look at oil. Oil all over the board in terms of the last couple of days. It is a interesting market to say the least. We had identified a 3-river evening star. That's these 3 candles here, star gapped in the center. The following day, which was yesterday, we looked for confirmation, which is that red candle with a lower low and a lower high. We certainly didn't see that. In fact, we had a solid up day. This would be a bullish harami if we put that into its basic candlestick pattern. And then today, we have this market trading lower. In other words, we're getting our confirming candle to this pattern, but it's occurring a day after this solid uprise. What do we make of this recent activity? Well, we know one thing, and that is that this market has got the most volatile moves that we're seeing in almost any market. Another 3% move, which in oil isn't that dramatic because the dramatic moves have been 5 and 6% on days. If we got these kind of moves in the stock market or in the precious metals, it would be front page news, so to speak, but we don't see it in oil. Oil, we have at this point become comfortably aware that volatility is intrinsic in this market. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.